Dear students, welcome you all to the session 2 video of Cost and Management Accounting 3rd semester BCom. In session 1, we discussed about financial accounting. Financial accounting is the process of recording financial transactions which leads to the preparation of trading and profit and loss account and balance sheet. This financial information is being used by the owners, the managers, creditors, banks, and so on. The financial information is general in nature and which is being used by both the external and the internal users. Now, if the managers or the owners have to take a proper decision, the general information does not help them. So that means financial accounting suffers from certain drawbacks. These drawbacks has led to the emergence of cost accounting. So we'll discuss the limitations of financial accounting. So this can be illustrated with the help of an example. We have this financial accounting information which is drawn from a trading and profit and loss account of a business firm which manufactures three different products. So the material consumed 1,50,000, wages incurred 70,000, other expenses are 50,000. So total cost incurred is 2,70,000 and the sales for the period 3 lakh. So the profit is 30,000, which comes to 10% of the sales. Now the manager has to take a decision regarding the continuation or discontinuation of the products. Now for example, product A, product B and product C. Now manager with this kind of information is not in a position to take a decision because the information given here is relating to the entire organization and it is not classified for each product, like for example, how much is the material cost for product A or how much is the material cost for product B or product C or what is the sales for product A or product B is not given. So the manager is not in a position to take any decision based on this. Now if you see cost accounting information, how it will be. So if in cost accounting, the information provided will be like this. So product A, product B and product C, the cost of materials, the cost of wages, the other expenses, the total cost, sales, we can see the profit as well as the profit percentage. By looking at this, we can clearly make out that product B has highest profit percentage which is 25.9%, whereas product A has got 23.8%. In case of product C, there is a loss of 22,400 rupees, which is actually causing the total profit ratio to come down to 10%. Now the manager is in a position to take a clear decision, that is to discontinue product C and continue with product A and product B. So with this example, you might have understood as to what are the problems or drawbacks of financial accounting information. I can give you another example. Usually, immediately after the semester results, we find out the results of each student as well as we find out the class average. Class average is the results of combined result of the entire students in the class. Now the class average results is found out and it is usually kept as a record. That does not help us in taking any decisions. Now for example, individual marks of students and individual subjects marks do really help us in understanding who has failed in which subject and which student has to be given a remedial coaching and so on. I think you have understood this. Now with this background, let us look into the limitations of financial accounting. So the first point is financial accounting provides unclassified information. Financial accounting does not classify the data according to the products or process or departments or services or jobs, isn't it? So it is such information, that is product wise information or department wise information or service wise information is not available in financial accounting. So financial accounting is historical in nature. That is, the information provided is relating to the past financial events. These are like post-mortem examination. So post-mortem is usually conducted after the death of a person. It helps us to understand what are the reasons for death, and we cannot bring back the person, isn't it? That is a problem. Same way with the financial accounting. So the next point is, there is no system of cost classification. So here in financial accounting, we do not classify the cost into direct or indirect cost or fixed or variable cost. We simply record the cost in our ledger accounts, and which we transfer to trading and profit and loss account. The financial accounting discloses the profit or loss as a whole. Now we have seen in our example itself, the profit or loss of the entire organization is being given. So it's not about each department or product, and there is an absence of distinction based on normality, which means that in financial accounting we do not classify into normal cost or abnormal cost. You might be knowing it. Have you ever recorded cost as normal cost or abnormal, which we are going to do it in cost accounting actually. Lack of effective material control. So financial accounting does not have a proper system of material control. There is no record of materials being consumed by each department. There is no proper system for controlling the misutilization or loss of materials in financial accounting. There is no analysis of wages. In financial accounting, you might be knowing, you record the wages. We do not record as time wages or piece wages or incentive wages or overtime wages. Such a classification is not being done, so which will not help us understand the efficiency of the workers and all. The financial accounting data is not helpful for fixing the price. So it's not helpful in fixing the future or the next year's price. There is no data for comparison. Financial accounting does not provide us any data for comparing the cost or profit under different methods of operation or different process. In the previous example, we have seen that the information as a whole is given, so we are not in a position to compare with product A or product B or product C. Since that sort of a comparison is not possible, it does not help us in reducing the cost. So information about a single or individual product or process is not available, because of which we are not in a position to reduce the cost or take up any cost control measures. So there is no proper system of evaluation. So it is not possible to compare or to find out the efficiency, and there is no system of setting up standards and comparing with the standards, which means that we are not in a position to evaluate the results and improve our performance. Financial accounting is not helpful in preparing the tenders and quotation, that is estimated price. We are not in a position to prepare the quotations with the help of financial information. And the other one is the data which is provided by the financial accounting is not sufficient for preparing the functional reports, which helps us in improving the efficiency, as well as the data is not sufficient for taking decisions. So inadequate data for decision making. So these are the various limitations of financial accounting. Now cost accounting provides information of the different products. We have seen in our example how the information about different products, product A, product B, product C is being given, which has really helped us take a decision regarding the continuation or discontinuation of the product. So decision making is easier if cost accounting information is used. So the information provided by the financial accounting is used both by the external users as well as the internal users, whereas cost accounting information is mainly for the internal use, that is mainly used for the purpose of decision making. Thank you.